Hey traders, welcome to the next video. So in this video, as you know, as we've been discussing, we're gonna go through and do some back testing here. So without further ado, let's just jump right into it. So we're gonna go down into one of the pairs I really like trading. I'm kind of just focusing on GU, GJ, and gold more so. So let's just go on GU. Let me choose a point in time, and the best way to do that is to actually just make this blank so I can't see what's going on. Let me change the color. Oh, yellow, cool. I'm gonna start on the weekly time frame, and I believe let's check two things. So let's check the time frame because I know I'm already gonna start on the weekly, daily, 4 hour for my actual entries. But let's just see. Okay, we're gonna start on the weekly, daily, go down into the 4 hour and maybe the 1 hour and 30 minutes. To actually look for our entry. Mainly the 4 hour and the 1 hour, we're going to try to spot those entries, but the weekly and the daily is going to be giving us our general trend for the market. So let's tap into this tool, and here in 2019, we're in 2021 now. Let's go over probably to the start of 2020. Okay, let's unblock our charts. We're on the weekly time frame and clear this up. So let's just take a look. So we're gonna tick through and see how we'll actually manage these trades. We're gonna take around 10 trades to actually get a clear idea for what we're actually doing and just have a view like that, okay? So what do we actually see with the trend? I'm gonna go through, this might take a little bit longer. Normally this is how we do our trading calls as well, where really you will do the back testing and we'll go through and just adjust our trades and things just like that. So here we have some moves to the downside, which we can take note of. Pull back above this area, back down. Here we have a slight pull above. If I just clear this, place this right on the high, we can see we have a liquidity grab there just above the resistance. That's not enough. We want the actual 127 and not this time frame for one. But it's just something to take note of. We had a high and then we peaked above it, okay? So given all of this, I'm still gonna look for trades to the downside. Here we have this support, which is still holding. This here, which I will identify as the resistance, and then we'll also identify this area as the next resistance above. So these are kind of our support and resistances that we actually have here right now. And like we've mentioned from the other videos, we know that there's orders above, orders below, orders above, orders below, orders above, and orders below. Okay, there. So let's actually go through and see what's going on. So given this and the fact that we are currently still underneath the resistance, we're going to look to go back to the downside and at least this area for first targets. If we are to make a pullback, we should at least make an extreme down here. Like I mentioned before, we're forming extremes on the upside and the downside of the market. Okay, so let's just back some of these things up. Let's go down into the daily. So this is all we really need for this time frame. I have an idea for the general perspective, for the general direction of the market, which should be continuing down. We just rejected this resistance, right, with a few candles. So we're actually late on the rejection, but we had a bearish engulfing rejection. And the reason why these are not green and red in particular is because I more so just focus on where price actually is and not what the color is. The color isn't that important. But I think it will also help to bring you to that place as well, where you're not focusing on what the actual color is, but where the candles have went and what the actual price is, okay? So let me go back to a drawing tool. So we have a bullish and then a bearish candle right there. So that's a rejection of this resistance. We had a liquidity grab to the upside, and then we actually had the last weekly candle run right into the resistance again, and then still close as a bearish candle. And we know it's a bearish candle because this candle is actually down, like it's the open price is above it, okay? So given all that, drop down to the daily time frame, and there we see we have probably like a 50% retracement or something going on here. Okay, so just about a 50%, and we're still looking to go to downside. So what I'm going to actually do is I'm going to apply this so we can have some period separators on here. I believe session breaks. Okay, so we do have it in. I must go back to the weekly time frame, and I'm gonna add these period separators in. The reason why I'm adding period separators, just in case towards the end of the week, I want to update my analysis if need be, and I just want to be able to stay updated. So that's going to happen around Friday, around the weekends. So that's what we're doing by having these period separators. So here on the daily time frame, there's nothing really super notable going on. We did reject this weekly resistance, which is fine. We have started making some moves back to the downside. We realistically just have to follow the pressure and look for a move back to the upside somewhat and a continuation to the downside. Okay, so let's go down to the 4 hour. We can start actually looking for our entries. Okay, so let's start with what actually happened in last week's candle range. So we have a few highs which we need to take note of. The best way to take note of these would probably be, let's just mark that as the high. And then we have another structure high right here where we can see price went like this. So far it's just downward moves. We would like to see at least a break above this first to continue to the downside. Okay, so even if the stop loss gets blown out here, we have the same thing going on here. We should actually get a peak above and then a continuation back to the downside. But at least for this week, that is what we're looking for, moves to the downside only. Let's go through and clear some of this up. Let's actually add our fib on. So let's go from high to low. So far, I don't think I'm gonna add the fib in for this one just because it's not super relevant right now with where price is. If we do break through this 127, I may just add the projection and everything in. But so far, it would basically just look something like this, and we would have an entry, not necessarily at the 127. I can put it just above because, like I mentioned, we want it to be in that liquidity area above the resistance or below, above or below the support and resistance. So let's go back real quick. Let's just place our things in. So the way that I think is best to draw this is just to mark off from the high, a little design to the top, and then I mark off the 161 and I mark off the 127. Let's go through and apply our trade setup right here. Okay, so just a few pips below. TP is going to be at the negative 0.27, and my stop loss is going to be at the interacting high. Now, this interacting high right here is a bit really close for my preference, so I would rather just choose the next one. And I still have a good risk to reward, still risk 1 to gain 5. So I will accept that. And then same thing goes, I need to place another pending order on the 161, just a little bit below. And stop loss is going to be different because we have two different interacting candles. In this case, the interacting candle is, for the 127, the interacting candle is this, but we're going with this one over here. And the interacting candle here is this. So that is where we're gonna end up putting our stop loss. Right at the top there, about 34 pips, call it. TP is gonna be the same area, negative 0.27, okay? So we have two entries set up there. First one is going to be risk 1 for 5.05, and the second one risk 1 for 5.6. So these are both great setups just right off the jump, because if we were to make one of these trades, then we're already up 5R, which gives us an advantage for the total of 10 trades that we're going to take. So we also have to manage our trade, but let's actually tick into a trade before we look into management. Let's tick through. So very close, okay? When things like this happen and it's very close to your entry, remember that we have a pending order in, and we're simply just waiting for that pending order to get hit. Do not get distracted. Do not get swayed into the market based on things that you are not looking for, okay? Okay, so there we get ticked into the market. We did not hit our stop loss. We did come very close. We still did not come back to a break-even mark, so we must just leave the trade the way it is, and let's just keep ticking. Okay, cool. So there we actually get to a break-even mark, and so what we're gonna do is we're actually gonna update our stop loss just like this, and we're gonna cover just something very, very slight, something 5 pips in this case, okay? Let me make my TP exact. So with that, let's just keep ticking through, and we've already brought ourselves to a place where we can't lose on this trade. It's already been broken even. And also this 161, I will just end up removing as well, because it is no longer valid because we have a new high. Like I mentioned, we always have to update our stop loss. So because we have a new high in this case right here, my fib will have to be adjusted to account for that. Okay, we still can't break past the 50 markers, so we're just sitting at 66.6 pips, and we covered 5. So at least we're break even, very close to getting stopped out there. Still just a whole lot of consolidations, what we have to work with. We did close below the 50, ever so slightly, okay? Very, very slightly. So what I'm gonna do is I'm actually gonna take my stop loss and I'm gonna move it just right before the 1 marker, okay? So let's just see how many pips that is we've covered now. Just about 20 pips, call it, okay? Let's keep ticking through, see what we're getting. So we've pulled back above the 50 marker, which is cool. We already have our stop loss move. Boom. And we actually tipped right down into TP. That's positive 5R that we actually get on this setup. Beautiful trade, I think. So what do we do after this? Now we just need to clear our minds and refresh our whole idea on what we are actually doing in the market. Remember, we're only still looking for downtrend situations. We're only going to look for those setups that come into the market, peak above the highs, and want to continue back downwards. Okay? So what I'm actually going to do to better adjust this is I'm probably going to, well, I'll leave everything the way it is. Let's just clean this up a little. Okay, so as the market stands right now, I don't see anything really visually appealing or anything super relevant that might could lead to another trade. We do have this high to this low, but one thing is this is not the definite low yet. I would wait for some sort of pullback because we can just keep making new lows, and then I would just have to keep adjusting it, which is not really time efficient. Okay, so let's just tick forward until we have some new information that we can actually work with. So there we get a slight little pullback. Okay, so I can work with all of this. We have this as, let's say, an average trend line. So if we were to get anything interesting, we can actually get like a break of this, right? Because we want to have that liquidity taken and pushed back to the downside. So that is one potential for just things that I see. But let's actually get the fib in from the high to the low. So in any case, if we're going to pull back up into an entry, we're going to get in right around here. Which is fine in this case. It matches up somewhat to the 161, so the previous 161. So let's just wait for more of a pullback before we actually lock everything in and say this is a pending order that we're going to set. So as you know, we always have to update things based on the new swing. So if we do go back and make a new low, we just have to update our entire fib. So we just broke off into a new week, and if you are familiar with how this platform works, you know that if I were to go to the weekly right now, we would just see exactly what happens for the week. So in that case, I'm just going to go back a little. Let's go back to the weekly time frame and adjust our perspective. Okay, let's see what's going on in the market. Can we work with what's going on? Okay, so we just got another bearish week, so everything is really still the same. We can still look for trades to the downside. Let's check out the daily. The daily is looking like the same thing. Like, we can just be looking for trades to the downside. So let's go back to the 4 hour. We know what we're doing. We have our fib. I believe the last tick that we did brought us right around there. Okay, so let's keep ticking through. Okay, we got a new low. I'm not going to update it just yet because we can continue to make new lows, and then it would just be tedious to keep updating. So let's keep ticking. We have a new low there, right? And so we can just see this as a liquidity grab to the upside, as a liquidity grab preparing to actually have a pullback to the upside. Like I mentioned, we can have that super average trend line right around here, have that liquidity grab to the upside, and then push back to the downside. I don't think putting the fib on this area is best. If anything, I will put the fib on this as being the most recent swing from the high and push that down to the new low right there. Okay, so that being said, let's just see if we get more of a pullback before we actually enter anything. Okay, so we're actually just consolidating. We're consolidating, making slightly new highs. So one thing that it's really important that we actually do set our pending orders, because what can happen sometimes is we get a huge wick that just goes right up to our area and then we never even go back to that price. So I'm just gonna place the pending order now because we're getting a lot of tight candles and consolidation in here. So entry is gonna be just underneath the 127 to make sure we get filled while we're actually trading live. While we're actually trading live, this is not a thing that we necessarily need to implement while doing this on TradingView backtesting, because there is no spread here. It's just one certain price. But either way, let's get back to this. So our stop loss needs to go on the interacting high, which is going to be right here. And so I'm just going to use this stop loss right here, which gives me about 38 pips in a stop loss, and my TP will end up being down here, so we have still about risk 5.6 for this trade setup. If we do need to update our fib later on, we will just go through and do it, but so far this is what I'm going to keep in. So far, yeah, this is what I'm going to keep in, and let's just see how it goes. So there, we're still pulling up, which is really good. So close. How close were we? We were about, call it 13 pips from our entry. Okay, so now we're actually branching into a new week. So in this case, we did not take any trade this week. This pending order that we set, either you delete it or you just leave it on because it is currently still valid. We have not made a new low yet. So everything is still valid. Let's go back just a tiny bit. Let's go back to the higher time frame, update our analysis. So we're still making bearish moves to the downside, still a bearish candle, so we're gonna follow that. We have a slight pullback as we've seen. Okay, so this is the market going through and entering its female state, as we've seen that it's not actually just falling right now. Okay, we actually had that trend line break, so it is performing a liquidity grab in some degree. But we have to actually wait for something that we can work with. Okay, so we came back to the previous lows, kind of, not exactly there. Okay, so let's just keep ticking through. What we can do is add a fib from this low to this high as well. See where we actually get our markers, which is a 127 right around here. Stop loss will be the same as this one here. And our TP is going to be the same. So pretty much these are the same exact setup in a way. In this case, we have risk 1 for 17, which is really good. And this one here is risk 1 for 5.6. So we just got a tighter entry just a tiny bit. So this pending order is getting deleted simply because they're both valid. But this one here to the right is based on more recent information and has a better risk reward. So I'd rather go with the one to the right. Okay. Let me delete this as well. We didn't have no setup last week. And then need be, I will also just place in the pending order that belongs at the 161. Stop loss is going to be at the interacting candle, which is going to be right around here, which was the stop loss for the 161 that was in that area as well. TP will still be at the same area. And in this case, our TP at the our risk to reward ratio for the 161 is going to be 7.77. So let's just tick through and see if we'll even get stopped out of this 127 or not. Let's just keep going. Or maybe we'll even need to update our position. Oh, look at that, we're not even getting in. Okay, so wait, we did get in. and our stop loss was actually hit. Okay, so that's how it goes sometimes. We have the 161 still in there, so I'm going to leave that. I'm going to add a down arrow right here. So that's where we tried to get into the market, ended in a losing trade. So there we have positive 5R and then negative 1R for this. This 161 still being valid. Let's just tick through to the end of the week. Okay, so we're there now. Let's go to the weekly time frame, and we see that we actually had a bullish week last week. Okay, bullish week. So given that we had a bullish week, we have this support right down here, more of a minor support compared to the resistance above, which is older. You can see the resistance above is older, but we're still trying to make our way past this support down to probably at least this area. Okay, is there anything else for the weekly time frame that we need to take a look at? Other than it's a bullish candle, we got 3 doji candles, which is showing some buyer strength coming into the market. Nonetheless, we want to be looking for these trades to go back to the downside. We want to go with the direction of the higher trend. Okay, so in this case, we actually had the 127 would have still been a good trade, which would still be carrying us to the downside. Let's tick through, because we can't exactly update our fib just yet, because this is still the this is no longer the high, but this is still the low. So we need a low here before we can actually update our fib and see if there's something that we can work with. Let's just tick through. Okay, so we're making new lows. We've actually come back to, I'm gonna delete this because this was from the daily time frame. What I would love to see from this level is it holding in some way and actually going back to the upside, or whatever the case, just produce an opportunity for me somewhere at this level, whether it's gonna break, go back above and then want to continue down, or depending if it goes up, we will have to measure this and the low, and maybe we'll have an extreme up here. Maybe we'll even have a trend line where we have an extreme push above and then continue back to downside. So we just need to work with the scenarios of what the candlesticks are actually doing, and let's tick through. So I'm just gonna leave it there. Okay, so we got a big push up to the upside. We have a few things. So this 161, I'm going to end up removing. Let's remove, I'll keep the fib in. So like I said, we have multiple areas that we can actually monitor here. So this is our low, that's undeniable, but we have this as a high, which can be measured, and then we have this as a high, which can be measured as well. This one over here to the farther left contains more information just because it has more candles within its range. This one here is more recent and more shorter term, okay? Things we're all taking into perspective when we want to find that extreme zone. So yes, I can find an extreme of this measurement, but there could be more of an extreme from a more general perspective, okay? So let me actually go through, set up my fib. Let me just see where this one lands. So if anything, we could pull out to an entry in the 161, which doesn't seem too bad. I would definitely ignore the 127 entry just because it is still in range, in the area, still within this area, okay? Let's move our high to the more general high, and we have our 127 right here. Okay, so like I mentioned before, if we have that average trend line just set right there, we can have some type of liquidity grab up to this area and then back down to the downside. Okay, so let's actually set our pending order in right now for the 127 TP, still down here. Stop loss needs to be at the high right around here. So we have 9.6769R this position, and I'm just gonna let it ride like this, and let's just see how it goes. Okay, so we actually, so the end of the week came, we did not take into our entry, which is fine. Sometimes it happens like that. Let's go a few ticks back and have a look at what is actually happening. So one bullish week here, as we've seen from the previous week, and then we actually have another bullish week. So 2 bullish weeks back to back. Okay, I don't want this type of stuff to sway us to go against the trend. Okay, we have already identified by looking at the grander scheme of things that we are, for one, battling this resistance area. Okay, but we must remember the structure that we're coming from. We should still be making ways back to this general area. While the market is consolidating and in this female ranging state, remember that the market is trying to throw you out, and you just need to be patient and continue with what you're doing. So like I mentioned, -5 are there. I mean, +5 are there, -1 are there. We're still up +4 are. This one does not get ticked in as we've seen as we ticked forward. So let me go through and just delete this trend line, as I don't really use those. And I will also delete the fib because it is irrelevant. Let's tick forward. So in this case, I still want to look for the downside. I still want to see that pressure and everything still come back in. So let's just see if we can actually get that. Okay, so we had a push to the downside, showing some liquidity on the buyer side, actually getting in. The big players are actually buying. Let's see how it goes. Okay, so price has actually made its way to the downside, and like I mentioned somewhere over here, this is what I want to see. I want to see price come down and probably come back to the upside somewhat, and then let's follow its way back to the downside. So new week, right? This is the end of the week, and one thing we can actually tell is just the open of the week and the close of the week. Okay, the open of the week and the close of the week. Open of the week, close of the week. So this one gives us a bearish week. We're going to continue to look for those bearish moves to try to capitalize on what the market is doing. Let me add my fib in from the high to the low. We don't know if this is going to be the exact low, but let's take through a little. Something that we can actually work with. So here we have kind of a minor resistance forming in the market. We can pop above this and then continue to downside. Not necessarily what I'm looking for. I'd rather I'd rather find an extreme area that contains more information. But we can do this one too. Let's just say we're gonna do this one. Let's go back. I'm gonna keep this projection in just in case we end up going to that area and we have to take an entry. Let's monitor the high to the low and measure it. Let's zoom in just a bit. Okay, so we have a 127 level just right here. Pretty, we're above the 50, so it's pretty relevant. It's pretty recent, like it's pretty close. If we look at the high, we have this as the high, about 20 pips. Stop loss, TP is going to go -0.27, which gives us about 6.47 R. I'm also going to set in the 161 just in case this one ends up being a loss. Stop loss is going to go at the high. So here we have two cases. So the interacting candle to the left is this very small one. So if I place my stop loss there, my stop loss realistically ends up being 6.6 pips. That's okay. If you want to work with that, you can work with that. Now, because the candle to the left of that one is very large, we have the option of making that the stop loss. But that stop loss, well, does it ruin the risk reward? Let's see. Yeah, so our stop loss in this case is not even, our risk reward in this case is not even 1 to 3, and we need 1 to 3. In this case, we are not sacrificing the stop loss to be worse, right? We're not sacrificing the stop loss to be there. It's mid-range, right? We're trying to place our stop loss at the high in case of sells and at the low of the candles in case of buys. In a case like this where our stop loss goes there and our risk reward, it hasn't been met, we can simply just add a pending order to move our entry to a place that makes this risk 1 to gain 3 at a minimum, okay? So that's what I'm actually gonna do for this, or I'll just stick to our original stop loss, which we can do right around there. And this gives me 18.76R as a potential. Let's tick through. Okay, so we ticked into our first one of the 127 there. Almost break even. Call it break even. Definitely call that one break even. So we're gonna go through and we're gonna place our line just right underneath. And we're now break even on that position. We're gonna go through, delete the second one. And let's continue to tick and see what we get. Oh, we hit our stop loss. Okay, cool. So we have a very small gain here. In this case, it's a small win or somewhat of a break-even trade. Okay, so as a result, we gained, let's say, 0.04%. So yeah, very, very small. And it's a total of 0.3R that we would have ended up gaining instead of our target of 6.47R. Okay, so that being said, everything is still the same. We're still looking for trades to the downside. All we have to do is just keep ticking forward and get updated. So our 161 stop loss would have been hit as well. Good thing we deleted that one. As we approach this area, I may just put a pending order right around here. We're pretty close, so let's just do that. Stop loss there. And this is the exact example that I was given right around here with this candle being so large. This candle here to the left is very, very large. So our stop loss needs to go right on the high of that, 50 pips in this case. Our risk to reward will still be good, right? At 5.6. So that's all fine. I'll leave that like that. Let's just tick through. Let me clean this up a little. Okay, so one thing I'm taking note of is that we actually have this resistance forming. So this could be a very likely area that we go in and hit. Yeah, there's very likely that we come in to hit this area. We also have this range that we can measure, which I'm pretty sure will make the 161 right in line with that 127. Let's just take a look from the high to the low. Yeah, so the 161 will go right around that area. So I'll still keep that pending order in. Let's just keep ticking. Okay, so we actually pulled to the downside. As long as we don't break this low, we won't need to update our fib projections just yet. Let's just keep working with what we're getting. So there we did end up breaking through the low. So when we actually get somewhat of a low pullback on this, we can update our fib. I'm gonna delete this, no longer valid as a trade entry. Okay, we're getting some slight pullback. Let me just draw the market structure in. So we're coming back to that whole downward move. We're having that pullback. We never got the pullback up there like we would have wanted. Then we have this whole move to the downside. We did break below this daily support, so we know we have orders there and we have orders there. Besides that fact, given that we're making this lower low structure and we actually peaked above it, we can be in the 127 area already. So that means we're a bit late to the whole party going on. But let's just put our fib on and see if there's anything that we can work with. Let's delete this because that's irrelevant as well. So we already hit into the 127. We can also do one of the 161. So let's put that one in first because we haven't interacted with that area yet. So that can still be a pending order. Stop loss is going to be right there, 35.5 pips. TP is going to be right around there. So risk 1 to gain 4. At least we met risk 1 to gain 3. So we're fine. Here, with what's going on, as we've already actually encountered the 127, so we would already be in a position. I'm not going to get in now. When I mentioned this earlier, I showed you that we're just going to get a worse risk to reward. Let me move this over. So let's say this was our normal entry, okay? Stop loss would have been right over here as that is the interacting candle. And our TP would be down here, so risk 1 to gain 3.2. Given the fact that we're late, if we're placing our stop loss where it is meant to be, our TP where it is meant to be, the only thing else that could change is where we actually get into the market. So if we're getting to the market down here, this is no longer a valid trade because we're not getting risk 1 to gain 3. You must abort this mission and not get in the market late, okay? So we have another option to set a pending order right at that area. As long as the next candle doesn't close below this one, this 127 will be completely valid to still take. Okay, so that is what we're gonna do. We're gonna have both setups still there. Let me move this over. We're actually approaching the end of the week. So far, the trend is still bearish, given the fact that we are below this. So that just tells me that next week, so far, we will be looking into taking bearish trades too. So I don't really have to delete these or anything. These aren't really becoming super invalid just yet. So let's tick through very close to the stop loss. And I believe this is one of those examples where I mentioned we'll get ticked into both. So there we are ticked into both and we have two different stop losses. Let me actually find this example. Okay, so this is the exact example. The only difference is that we're not sharing the same stop loss. We actually have different stop losses in the actual case that we're backtesting. But this is us getting triggered into the 127, while also just being in drawdown, getting triggered into the 161. The 127 is very close to being a losing trade, but we also just triggered into the 161, so we still have the room for success. There we triggered out. End of the week, like I said, it's already a bearish week, so everything is still going to be the same. There we have another negative 1R. Negative 1R, negative 1R. So now out of the positive 5R that we first gained, we have positive 3.6R. Let's keep ticking. We can't break even yet because we haven't moved below the 1 area. Let me move this like this. Yeah, that works. Okay, so there we actually moved below the 1. So let's take our stop loss and I'm just gonna cover to break even, right? If we can pass the 50, I'll move it to the 1. Let's keep ticking through. Say we're back at the 1 area. Just consolidating, hit our stop loss. So this is gonna be a small winning trade or a break-even trade as well. What we can do is we are popped back above the opposite side. Here we have what looks like to be an average trend line. Somewhere like this. So we can still pop above this area. This is similar to all the drawings I've done before, where we pop back above this whole daily resistance, support and resistance area, and still follow through back to the downside. Every trade idea that we look for is going to be to the downside because that is what the weekly has been portrayed. That is what the higher time frame, the higher vibration has been showing us. So that is what we're going to go with. Okay, so there we have a losing trade. Let's take this. Let's add that there. Let's add that there. And then we had our other trades. We have two trades here actually. and this one closes at basically a break-even mark. It's going to be positive 0.2 R, right? Something very, very slight. So what we can do is take our fib and actually update it from the high to the low. Okay, this high to low doesn't give us a valid 161, but this one in our measurement can. I'm gonna actually take it into the 161 or the 127 and give us a good entry. So where do we start? We're gonna grab our pending order tool. We're gonna add our entry right there, just below the 127. Stop loss interacting candle high, which is gonna be about 22 pips. TP is gonna be right down there, so 6.23 R. Let's set up the 161, which is gonna be just above. Stop loss is gonna be just right here. I'll make that at this high. Stop loss is going to be the same thing for 10R on that position. Let's tick through and see what happens. So we tick into our first position with the 127, and that we said was risk 1 for 6.23. Boom. If we can pass the one marker, which we just did, we'll actually move to a break-even status. Okay, so we're gonna move our position, our stop loss there. Let's continue to tick through. Okay, that is passing the 50 marker. Let's move our stop loss right above the 1. Okay, so there we actually hit our TP, nice. Okay, so let's delete this 161 that we actually have there. So, like we have to remember, after our trade, we need to update our analysis. So what is actually going on in the market right now and what needs to be updated? Let's add a red tool here so we know that we took a trade. How much trades have we taken so far? I believe we've taken one there. We had 2 weeks of blanks. Then we have trade 2, 3, 4, and trade number 5. So we're gonna go through and take 5 more that we can tally everything up. Because we have to remember that we're looking at our trades in a set-by-set spectrum. Trading is not viewed on a trade-by-trade basis. We're not looking at it, okay, this trade was a success, and this trade was a failure, and this trade. How was the group of trades that you took? This is why our sample size needs to be at least 10, okay? By any means, let's tick forward and see if we get some new information, if we can get a slight pullback so we can actually draw our fib on the charts. Boom, we're actually crashing right to the downside. Let's go to the end of the week. Okay, slight pullback. Let's go to the weekly time frame. Still downward pressure. Still just having downward pressure. We did perform a slight liquidity grab of this with this candle right here. Let's go daily, check it out. With Friday's candle. So we can have a slight pullback in the market. Right, this would be the buyer's side. The buyer's trying to get into the market. Where's my drawing tool? So here we just have, like, let's say that average support. What we're seeing right now is a liquidity grab of that. We got to see how high it will actually come before it wants to give us an opportunity to once again go back with the weekly trend stuff to the downside. Looks like we have some resistance really forming here at that daily area. So we can pop above that and try to continue down. We have this resistance here as well, so we can probably pop above that and head our way down. But let's just actually work with the structure that the market gives us. So back to our entry time frame with the 4 hour. I'm gonna start by adding our fib in from the high to the low. Okay, so we have 127 there based on this whole spectrum from high to low. Let's just tick through and see how that goes, or if it needs to be updated or whatever the case. So just a female state of consolidation going on. And we remember, as it's doing that, it's just really collecting orders and things of that nature. We could probably enter an entry to the downside based on the average range that's being formed here. But like I mentioned, so this contains less information than this would as a range. So I'd like to see the extreme of here, or the extreme of the 161 right around there. So let's keep ticking through and see what we get. Okay, we're actually getting pretty close. So what I'm going to do is just set the pending order in. Negative 0.27. Let's place a vertical line, a horizontal line right here. Let's see where the stop loss belongs. Oh, this one's a crazy one. So interacting candle to the left is a huge candle. So this means that our stop loss needs to be to match that. And in this case, it's good because we still have a risk 1 to gain 5.46 R, which is really good. So I'm going to keep that in. Let's set up our 161 entry as well, just below. Okay, so our stop loss is going to go right there, about 30, call it 32 pips. TP still going to be the same as the 127, but in this case we get risk 1 for 16.778 R, which is really good. And then the first one is 5.46. So let's just tick through, see how this goes into this extreme area. Okay, so that ticked us in. Also a bullish week. Okay, so this is like the drawing that I've been mentioning and showing. So we got that break below that daily resistance. We actually had that push back. So now we want to just see price follow through to the downside. Ooh, okay, stop loss hit, negative 1 R there, and then we actually ticked into the 161. So same thing goes, we just want to see price follow through to the downside. A little bit of consolidation. We're approaching our first target area that we can move to safety. In this case, we're moving to safety right here. This I'm going to adjust because we had our stop loss hit there, entry there, entry there. And like I mentioned, we're safe on this trade. Let's keep ticking to see if we can actually hit our TP or where we'll actually, how we'll actually get out of this trade. So there we closed below the 50 marker. So I'm going to move my stop loss just above the 1. Okay, let's keep ticking through. Boom, that's TP hit. So that's 16 R basically that we gained for that position, which is one of those big winner trades that we mentioned before. These are the trades that we want to stick around for. So sometimes we have small losses, right? Which is going to be every loss needs to be a small loss, right? When we lose this, it should be a 2% loss. This should be a 2% loss. This should be a 2% loss. All these losses need to be 2%. This loss, 2% loss, okay? Even though our risk to reward was risk 1 for 17, we still ended up losing negative 1 R, 2%. Negative 1 R, 2%. Negative 1 R, 2%. Or this one here is a break-even trade. This one here is a small win. And this one too, I believe. All these two are small wins. This one is TP hit, which, yeah, and then this one's small loss, and this one TP hit. So we have to remember our perspectives. Small win, small loss, break-even trade, big win, okay? In this case, this is a big win trade. Let's keep ticking through and see what else we get. Same thing, everything still stands. We're still gonna look for trades just to the downside. Is this our weekly level that we had mapped out? Okay, when we actually get to the end of the week, I need to add some more period separators. But let's just see how the market is actually getting to develop. We're on day 3, day 1, 2, 3. Ooh, slight pullback in the market right there. Another pullback happening in the market right there. So what I want to do is, what I see in the structure is the huge push. We have a slight let off right there, another slight let off right there, and then we actually came to consolidate and accumulate a way more orders. So we might actually get a slight bull run up to the upside for a little. I want to see price actually, like I showed from the other drawings, basically break, come back above this area, and then continue back to the downside. The trend hasn't completely changed yet. But actually, as we hit into Friday, as we hit into Friday and the end of the week, I want to update my support and resistance. I believe this is the weekly support that we've been looking for our targets to actually hit on. One thing that I can add to all of this is RTP for these can realistically be down here as well. That is another option. That is the last option, TP number 3. We have TP number 1 at the negative 0.27, TP number 2 at the negative 0.618, and that is really only used if there's confluence in that area. If there's like a support that is in this area as well, then we know that we can try to just aim for that area. Okay, so let's delete this. We are on 1, 2, 3, 4, and this is the last day. Okay, so what I'm gonna do is add my period separator right here. So what I'm gonna actually do is just go back. Let's go to the weekly time frame, and then let's just add some of these in. Okay, we're actually at a detrimental place in the market right now. We've broken below this support area. So this tells me in my mind that we are at an extreme point in the market. There is a chance that, well, there's a chance for a few things, okay? So either this liquidity is going to get grabbed and we're gonna continue back to the upside, at least this area for first target, or we can just come back, reaccumulate some orders here, and then continue down to the downside. But let's see where our targets would be if we continue to the downside. Let's just see. We have absolutely no information to the left. So what will we do in that case? Our targets are just going to be the negative 0.27, okay? Or at least just risk 1 to gain 3. But this is what I'm working with. Let's just see what the fib looks like from low to the high. Okay, we actually did crash into the 1.27. So this can show us that I probably might just wait for 1 week's worth of information to see how we actually deal with this. Will we go back to, let's at least go back to this resistance area to get more information and see what's happening. See what the daily is doing. Delete this fib. Yeah, so the daily just tried to go back up there, didn't actually get to. Let's just tick through a whole week's worth of information. So in this case, I'm just gonna sit out this week. I just need more information to actually work with before I can do anything. Some weeks are like that. We haven't taken a trade every week. Sometimes it's like that. It's life, okay? So we have this resistance, but we still have this weekly resistance in the market. Let's just keep ticking through. So this looks kind of good for a move to the downside. But just because I'm waiting for the week, I'd rather just wait and miss the opportunity. Okay, so bullish week, bearish week. So bullish week here, bearish week here, bearish week here, then bullish week here. Let's go check out the weekly time frame. Oh crap. Okay, so wow, a big bullish week engulfing the last week. So a lot of buyers have flooded into the market. Now I really realistically want to switch my bias. Let's just aim for back to this resistance. Okay, back to this resistance because we collected a lot of orders down here, with this being a support from 2016 and now we're in 2020. So about a 4-year old support area, liquidity just got grabbed from that. So let's see a bunch of the orders get pushed back to the upside. Daily time frame, what is happening? Same thing, we're just getting bullish pressure right now. So we want to see the market come into a state of consolidation, extreme continuation back up. So let's just tick through, see what is going. So here we have something very slight, very slight, right? And so what I just see by this being so slight is that there's not actually a lot of information going on within these candles. Let's just keep ticking through for something of more information, higher quality. So this low to this high is something I can kind of deal with. Where is my circle to? Let me just place that there. We have low and we have the high. So I can have these measured and let's just see where our projections land. Is it something we can deal with or not? Okay, so we have this area of support right around here. So if anything, I kind of want to aim for the 161 or the 127 can realistically be effective as well. Let's just do both as we normally should. So I'm gonna place an order at the 127, stop loss interacting candle low, which is gonna be just around here. TP negative 0.27, and we get 9.45 R. Same thing that we're gonna do for the 161. Stop loss for the interacting gotta be down there, 155 pips. But nonetheless, if we lose that trade, that should be a loss of 2%, and there's gonna be a loss of 1 unit. So we have a little edit we gotta make, because this for the 161 is 2.67 R. This is not something we can work with. TP is where it should be. Stop loss is where it should be. So what we're gonna do is just reduce our entry. And one thing I wanna mention is, when we have it set like this and we move our entry, it basically moves by the power of 2, because every time we move it down, our stop loss decreases by 1 and our TP actually increases by 1, right? So it moves by a value of 2. So it's not gonna take a lot of pips to the downside to actually be at a risk 1 to gain 3 ratio. There we actually get risk 1 for risk 1 for 3.12. We'll just deal with that. And our TP is pretty much just right on the 161, right? Normally we want it just above that. So let's just tick and see if we get any new information, anything we need to adjust. Okay, so right so close to the high. If we do make a new high, we have to adjust our fib. We did not tick into the 127 yet. Okay, so bearish week. I believe we might have just ticked in. Yep. Okay, so we're still going with the same bias. We want to get back to that TP area right around here. Let's keep ticking through. Oh, we passed the 1 marker, so let's move our position to break even. A very small gain just to reduce our risk in the market. Let me add a green arrow there because that is where we got into the market, and we just passed the 50. So I'm gonna take this, I'm gonna move it up to just below the 1 area. It's a great example because now we're getting scenarios for both the bearish trend that was earlier and the bullish trend that we're looking for now. Okay, so there we go. Let's keep going. Okay, so we're going back to previous highs. Have not closed on the other side of the 0 yet. Or did we? I think we might have just now. Place a line on the 0. Okay. We did close above that marker. Let's see if we can get a clearer candle, which is right there. Did we actually hit the TP? No, we didn't. Nonetheless, we're just gonna move our stop loss up just below the 50 marker because we closed above the 0, but we haven't actually hit the TP yet. So what we're gonna do is just keep ticking through. There, we finally hit the TP. Finally hit the TP there, which is going to give us 9.45R. Stop loss was just around mid-range. How many trades have we taken so far? I'm going to go through, delete this one, no longer valid. I believe we were at trade number 5 around here. Or we have 1, 2, 3, 4, 5, 6, 7. Then we have trade 8. So let's go through and take through 2 more trades. Everything's still the same, still looking for buyers. Here is a clear area of support and resistance, like we have that average. I want to see something along these lines to continue back up to the upside. Okay. Let's delete this one as well, and just keep ticking through. Let me draw this in for visual representation. It's kind of already marked off in my mind, but for visual representation. So there is the pullback. I want to see the trap. I want to see a move to the upside. Okay, so didn't get an exact move to the upside. We keep pushing below. I could look for an entry opportunity. Let's just see what the fib says from the low to the high, which is invalid on everything. So there's no 161, like the 161 and the 127 have already passed for entries. So that's not something I'm going to be interested in anymore. I'll just be late. Let us keep ticking through and see if we just get any more information that we can work with. Okay, so we just pushed into a new week, right? Everything really still looking the same. What I would like to see is what we can get from this resistance, support and resistance area as well. Pop above, something of similar as we're expecting over here. Continuation back to the upside. So there we can actually, I would like to see a break of it, which finally came. Now let's get some more of a pullback. Okay, wait a second. So we have this area that we can put in as somewhat of a support. Okay, wait a second. So here is something kind of interesting where we have this as the structure. We can be pulling up to go back to the upside. Let's see if our fib gives us anything to work with. We're currently at the 127. Our original stop loss. So this is the example of a re-entry. Okay, so this is our first time actually entering into the market. But had we already have a pending order set, we would have lost the first one, because our position would have had its stop loss right here, just right here. And as you can see, our stop loss would have been hit, and we would actually probably triggered into the 161, where we would be in. But given what is actually taking place, what we have to do is enter at a market order, a current market order. So we're gonna do that there. Our stop loss is adjusted to the new low. TP is going to be the same at the negative 0.27. Is our risk to reward good? 3.67. So that is something that we can work with. Let's tick through. Stop loss hit. Okay. Sometimes it goes like that. We're actually right at the 161. So I'm just going to get into another re-entry based on that. Okay. So this would normally be set as a pending order, but because we're actually right there right now, I can just set it as a market order. Let's just see I'm not missing any wicks. Okay, so given a few things, okay, this stop loss would have originally been set right here, so that is what I'm gonna do. It's right there, and we have risk 1 for 4.62. Let's tick through. stop loss hit again. So there we have negative 2R. I believe I said we were at trade number 8, so that's 9 and 10. Let's go to the end of the week. And we also, one thing worth noting is we have no more entry opportunities. For this measurement here, we probably have another measurement right here which we can take a look at. From the low to the high. Okay, and this actually gives us a projection right at the 127 right now. Our stop loss would be right here. So in this case, our TP is actually not going to be the same, but our TP is now going to be up here because this is the actual projection that we're working with. Okay, so our TP is going to be there. Let's add our buys that we failed on right around here. And we have another buy that we're taking right now. So this one is risk 1 for 20. Let me make sure my stop loss is placed properly. So risk 1 for 17. Let's keep ticking through. Boom. We have not passed the 1 marker, which is here. Let me identify that like that. That is the 1 marker that we still haven't passed. So let's keep ticking. Stop loss hit. Okay. Do we have entry for do we have opportunity for a re-entry here? We did reject the 161 and we are still above. So yes, we do. Let's see if we can actually take something. Okay, let's see if we can actually get a good risk to reward. And then one thing, as I mentioned while we were explaining things, that we have to update our stop loss to the previous low. Okay, TP still going to be the same area. In this case, it's risk 1 for 3.6. We can work with that. And now we have actually closed above the 1 marker. So because we closed above the 1 marker, well, in this case, I like to work with the information that is actually present. And because I didn't update it, I will just have to leave it the way it is. But let's keep ticking through. So good. We managed to make another push to the upside. So what I'm going to do is break even on the trade. Simply just wanting to reduce the risk. Okay. Where's our 50% marker right here? So our next time updating the stop loss was when we crossed this red line. Stop loss hit. Okay. So I just wanted to make it to the end of the week. I believe this was trade 9, 10, 11, 12. Let's just have a quick review of the trades that we took and see what are our total results. Okay. And maybe I can just type this here. So we're going to have trade number 1 to 10. Okay, and our first trade gave us a positive 5.05 R. Okay, so that is really neat there. That's a good start. And one way that I think about it as well is every time I win, I basically have more to lose later on. So let's zoom in on our second trade that we took. So this was the first trade. Yeah, so this was the first trade. Our second trade, we have the stop loss hit. So that is going to be negative 1R. Okay, moving on to the second trade that we took, which is going to be just about a break-even trade. And if I can just make the math exact as to where our stop loss was. Okay, so right there, so we got just about 0.2 R on this. Right, so very small, but it is something that does add up. Okay, one thing in trading, this is why we look at our trades in a group setting, is because things add up over time. Next, we have this setup, which ended in a small win. Sorry, hold on. We have a small hidden one right here. So this first one ended as -1R. The second one ended as we'll call it 0.01% R. Where's our writing? Next one was -1R as we took a loss there. Next one was positive 0.01R, which we'll give. Let's keep moving on. So this is the 0.01, and this one we actually have TP hit for positive 6.23R. Okay, so these winning trades that we ended up taking, I can just do basic math of these and we're already positive. We are already at a winning rate, okay? Let's move to our next trade here, which we lost, which is gonna be -1R. And then our next one is a winning trade, which is positive 16.78R. Okay, so that is a really beautiful trade that puts us above and beyond. Let's grab this. Let's keep moving forward because we did take some other trades as the trend changed. Here we have our first entry, positive 9.45R. Beauty. Then we have, I believe we have like 3 or 4 setups in here, about 4 setups. Okay, so our first 3, so 1, 2, and 3 all hit their stop loss. Let me just put that in. So this is going to be -1R. We have 11, which is going to be -1R. We have 12, which is going to be -1R. And then our last trade number 13, is going to be positive. We'll do it something very slight, 0.01R at a minimum. Okay. So let's add all these things up. Remember, there's a few math. So let's remember that there are a few things to the math that needs to make sense. What is the win rate and what is the risk reward ratio that we're taking? You know we're taking a minimum of 1 to 3, and you know our minimum risk is 2%. Okay, and if it's risk 1 to gain 3, there should at least be 6% on the opposite side. Okay. So let's just add some of these things up. Let's add the first one that is easiest, which is going to be the win rate. So we have 1 win, 2 wins, 3 wins, 4 wins, 5 wins, 6 wins, 7 wins. Out of the 13 trades that we took, we have 7 wins. Need a little help doing math, so let's just do, we have 7% of 13 trades, which means we have a 53% win rate out of all of the trades that we took. Okay. (53% win rate), and we know our risk reward is 1 to 3. So let's calculate our risk rewards that we've been. So let's calculate the risk rewards that we've been getting and see what the tally is. Okay. So we made 5.05. We have -1. We have positive 0.02. We have -1, positive 0.01. Plus 6.23R. We have -1 plus 16.78 78 plus 9.45, negative 1, negative 1, negative 1, plus 0.01. Okay, so as an end result, we're still going to take home 31.55 R. Can I copy this? Copy. Yeah, so at the end of the day, we're still netting 31.55 R, okay? And we know based on what we were risking, we took 13 trades, so that would have been risk 13 to make an actual 31.55 R. So we just need to keep these things in mind, okay? What is the win rate? What is the risk to reward ratio that we're taking on our trades? And are these things equaling a positive number, okay? This being above 50 already means that we're gonna have a positive win rate in that aspect, okay? If the risk to reward ratio was off, maybe we're risking $10 to make $1 on a trade, then we can run into more issues. But this risk to reward equaled a positive number and our win rate equaled a positive number, okay? So that's all I really wanna share in this video, guys. We did some back testing, we covered 13 trades, and we have a win rate. We have how we're managing our trades. We have the risk to reward ratio as a sum, okay? We're looking at all these trades as a group, all these 13 trades as a group, and not each trade individually. Like I said before, we don't know which trade is gonna be a winner, which trade is gonna be a loser. And here we actually ran into 3 losses in a row, then a small break-even trade. That type of stuff cannot discourage you from the next trades that you'll actually be taking. These things cannot discourage you at all. So that's all I really want to say for this video, guys. Thank you for tuning in. We may or may not do another backtesting videos, or I'll just go through and add more and more backtesting videos so we can gain more clarification and things just like that. But thank you for tuning in, guys. I wish you the most success in your trading. Remember to be very selective in these things. Put the odds of success in your favor. Thank you for tuning in, guys. I'll catch you in the next one. Peace.